Okay.
Good evening, everyone. Welcome to our February 28th Town Council meeting. We did have an executive session prior, so we're back in open session now. We will begin with I got to do the emergency evacuation first. In the event of an emergency, you can exit the two doors to your left or the front door here. We would exit the building and meet across the street at the school administration building and wait further instruction. Now we will stand for our Pledge of Allegiance and a moment of silence for the men and women serving in harm's way.
One nation, under God, indivisible, with liberty and justice.
Thank you all. Okay, we will begin with roll call.
Here. Ms. Abbott?
Here.
Mr. Hamilton?
Present.
Mr. Katzman?
Here.
Mr. Kelly? Dr. Ryan?
Here.
Mr. Aguirre?
Here. Okay, I do have to just take care of a little housekeeping. We are streaming as well as live, so we're under the hybrid process. Those of you who are streaming in tonight or calling in on the phone, if you use the icon to indicate you have a question, you'll be called upon. If you're on your phone, *9 will indicate you have a question. *6 will allow you to mute and unmute your phone. Whether you're speaking to us on phone, through the Zoom or in person tonight, please state your name and address for the clerk, and we'll continue on. Again, as I stated earlier, prior to our council meeting tonight, we did have an executive session under potential litigation. One vote was taken. Moving on to our executive summary, I have no other information to report out. So we will begin with our consent agenda.
Move to approve as presented.
Second.
All those in favor?
Ms. Jukusa? Aye. Ms. Abbott?
Aye.
Mr. Hamilton?
Aye.
Mr. Katzman?
Aye.
Mr. Kelly?
Aye.
Dr. Ryan?
Aye.
Mr. Aguirre?
Aye. Motion passes 7-0. Next will be sitting as the Board of License Commissioners. We have a peddler's license for a mobile food establishment, new. We have 3. Totten Foods LLC, doing business as Big Dog Eats, 23 Gibbons Ave. You want to do them one at a time or all 3?
They're all the same.
Do
Okay.
all 3.
Next one is Sarah McMillan, DBA Max Screamin' Corn and Tacos, 2 Palmer Street, Barrington, Rhode Island, 1 vehicle. And the third one is Gotta Q Brands LLC, doing business as Gotta Q BBQ, 2000 Mendon Road, Cumberland, 2 vehicles.
Move. Motion to approve. all
Second.
3.
All those in favor?
Ms. Jukusa? Aye. Ms. Abbott?
Aye.
Hamilton?
Aye.
Mr. Katzman?
Aye.
Mr. Kelly?
Aye.
Dr. Ryan?
Aye.
Mr. Aguirre?
Aye. Motion passes 7-0.
Motion
To adjourn as the Board of License Commissioners.
Second.
All those in favor?
Ms. Jukusa? Aye. Ms. Abbott?
Aye.
Mr. Hamilton?
Aye.
Mr. Katzman?
Aye.
Mr. Kelly?
Aye.
Dr. Ryan?
Aye.
Mr. Aguirre?
Aye. Motion passes 7-0. Next, we have minutes from our February 14th meeting.
Move to approve.
Second.
All those in favor?
Ms. Jukusa? Aye. Ms. Abbott?
Aye.
Mr. Hamilton?
Aye.
Mr. Katzman?
Aye.
Mr. Kelly?
Aye.
Dr. Ryan?
Aye.
Mr. Aguirre?
Aye. Motion passes 7-0. Moving on to our town administrator's report.
Good evening, Mr. President, Town Council, ladies and gentlemen. I was asked to give a quick update on the West Main Road safety audit. Feedback to the draft safety assessment of West Main Road was conducted, which was conducted by Rhode Island Department of Transportation, was provided mid last year. The Department of Transportation and our contractor assigned to the study have been finalizing the report. I reached out to them last week inquiring as to when we can expect the final report and was told we can expect that to be released within the next 2 weeks. I'd like to announce that the Rhode Island Interlocal Trust has awarded a grant of almost $1,000 towards the purchase of a magnetic manhole catch basin cover lift device. The Trust Safety Enhancement Grant Program is designed to provide assistance for the purchase of safety equipment or services that would help to promote safety, safer work environment, and reduce the frequency or severity of claims. I'd like to especially thank Paul Rodericks, our Deputy Director of Public Works, for working behind the scenes to get this award. As part of the development of the Parks, Recreation, and Open Space Master Plan, the town is seeking public input through a series of workshops. Those interested are encouraged to participate in the first public workshop, which will be run by a consultant who is assigned or has been hired to prepare the plan. That workshop will be Wednesday, March 16th from 6:30 to 8:30 p.m. It will be held remote, so that means it'll be conducted over Zoom. Details on how to participate, learn more about the project, learn how to get involved, have all been advertised and can also be found via the news and announcements section of the recreation section of our website. A drive-through distribution of free COVID-19 test kits was conducted by the town at the Raytheon site this past Saturday. We were able to distribute over 1,200 test kits to Portsmouth residents. We still have inventory remaining and will receive more test kits this week. Our Emergency Management Director, Ray Perry, will contact and work with local organizations to assist us in the distribution of these test kits to a wider population as these test kits arrive. Last week, we received word from DEM that the Recreation Trails Grant Award for improvements at Melville Park has been conditionally approved pending a federal review, which is now in process. While awaiting final approval, we've been notified we can move forward with the drafting of grant contracts. This is good news, and to refresh everyone's memory, this is an almost $32,000 grant for the improvement of the park's trails. And then lastly, the Recreation Department will conduct 2 hiring events for recreation summer jobs. The first event will be Tuesday, March 8th from 6 to 8 p.m. And the second will be on Saturday, March 19th from 2 to 4 p.m., both at the Brown House. We are looking for lifeguards, camp counselors, camp directors, and gate attendants. People interested in summer employment can stop by for an on-site interview during these two events, and more information can be found via the Summer Job Fair heading, which is also under the news and announcement section of the town's website. And Mr. President, that concludes my report.
Thank you, Mr. Rayner. Okay. Moving on to resignations and appointments. Under resignations, the first item is Wastewater Appeals Board. We have the resignation of Lord Scott Dixon.
Move to accept with regret.
All those in favor?
Ms. Jukusa? Aye. Ms. Abbott?
Aye.
Mr. Hamilton?
Aye.
Mr. Katzman?
Aye.
Mr. Kelly?
Aye.
Dr. Ryan?
Aye. Sorry, aye.
Mr. Aguirre?
Aye. Motion passes 7-0. And also we have resignations on the Zoning Board of Review for Bill Wadka.
Move to accept with regret.
Seconded.
All those in favor?
Ms. Jukusa? Aye. Ms. Abbott?
Aye.
Mr. Hamilton?
Aye.
Mr. Katzman?
Aye.
Mr. Kelly?
Aye.
Dr. Ryan?
Aye.
Mr. Aguirre?
Aye. Motion passes 7-0. On to appointments. First item is the Bristol Ferry Town Common. There are 7 vacancies. We have 1 applicant, William Dwyer.
Move to approve Mr. Dwyer for the Bristol Ferry Town Common Center Committee.
Second.
All those in favor?
Ms. Jukusa? Aye. Ms. Abbott?
Aye.
Mr. Hamilton?
Aye.
Mr. Katzman?
Aye.
Mr. Kelly?
Aye.
Dr. Ryan?
Aye.
Mr. Aguirre?
Aye. Motion passes 7-0. And next we have the Dog Park Committee. It's a reappointment of Jennifer McKinley.
Move to approve.
Second.
All those in favor?
Ms. Jukusa? Aye. Ms. Abbott?
Aye.
Mr. Hamilton?
Aye.
Mr. Katzman?
Aye.
Mr. Kelly?
Aye.
Dr. Ryan?
Aye.
Mr. Aguirre?
Aye. Motion passes 7-0. Moving on to old business, monthly finance report. Ms. Lasky?
Honorable Council, as of the end of December, the town is now halfway through the fiscal year 2022. General fund revenue continue to outperform budget. As of December 31st, total revenue is at 56% of the total budget. Year-to-date general fund expenditures are ahead of budget at 52%, are expected to exceed budget at year end due to the emergency road repairs. Snow reserve fund balance is currently 125,220 and may be needed to offset costs of the recent blizzard and snowstorms as they continue throughout the season. At this time, despite weather-related expenditures over budget, we continue to project a nominal surplus and or to break even at year end.
Thank you, Ms. Lasky. Any comments, questions?
Motion to receive and place on file.
Second.
All those in favor?
Ms. Jukusa?
Aye.
Ms. Abbott?
Aye.
Mr. Hamilton?
Aye.
Mr. Katzman?
Aye.
Mr. Kelly?
Aye.
Dr. Ryan?
Aye.
Mr. Aguirre?
Aye. Motion passes 7-0. Okay, moving on to new business. It's a presentation of the fiscal year 21 audit. Come on up. We have Ms. Shahadi from Shahadi Hague Shahadi and Company.
Thank you.
I wish I knew how. We're going to pull this up, right? Is it on that screen?
Yeah.
I see. All right. We're good.
We're good?
We're good. This one's still not working. Supply chain issues. All right.
Everyone probably has it in advance anyway.
Yeah.
It's in.
It's in your packet. So tonight I'm here to report to you on the fiscal year 2021, so June 30, 2001, year-end fiscal audit. I prepared the presentation a little bit differently this year than I have in the past. I'm going to spend a couple screens on our audit report itself, because there seems to be a number of questions with regard to what we opine on an annual basis. So I thought I would do a little bit of that. The financial statements are developed into a number of sections. The first section is the introduction section. So that's the section where the community has the ability to write a transmittal letter, which you do. It includes the organizational chart as well as the elected official schedule. But what's really important in this particular section is the certificate of achievement for excellence in financial reporting. I'm happy to announce that the town has repeatedly received that certificate from the GFOA. So that's the government finance organization. So I've included just, a snapshot of what that certificate looks like. I'm assuming it's hanging in the administrator's office, more likely than not, or here in town hall somewhere. In the report itself, again, as it has been in prior years, there are two reports. There's the report on the there's a report on the financial statements itself. That's on page 10. And then there's the report on the internal controls, which is included on page 187 of the report. So in both reports, were clean reports as you have received in the past. They're referred to as unmodified at this particular point in time, and the town has received no findings. The next screen is the actual independent auditor's report. This might be the last time you see it in this format. The GFOA has determined that no one ever gets to the opinion paragraph in the report itself, because the report tends to get longer and longer. So they have made a motion on their board to move the paragraphs around. And so the opinion paragraph will typically be first in future financial statements. That's kind of interesting. The report is on the financial statements, as I've indicated. On the next screen, I've talked about here what is our responsibility. So our responsibility as the auditors is not to look at every single transaction. It's to express an opinion on the financial statements based on the audit, that they're fairly presented. So there's always a misnomer that we've looked at every single transaction in a particular area, but we have not. We are looking at material items. We're looking at items that we haphazardly test, and we're looking at items that we choose by basis of the internal controls that we are going to test as well. Our opinion, again, is on the next screen. It's referred to in all material respects. So it's not every transaction, it's all material respects that the financial position of the governmental activities and the business activities and the aggregate information is fairly presented. So what does all that mean? So the governmental activities are going to be your general fund and your school unrestricted fund. Your business type activities are going to be all of your enterprise funds. So here in the town of Portsmouth, you've elected to show all of your enterprise funds individually. So each one of your funds are shown and we opine on those particular funds. And then the aggregate remaining funds are just that. It's the non-major capital project funds. It's the remaining of all of your special revenue funds, as well as any fiduciary funds that you might have. And so what you'll see in your document is the division between the basic financial statements, what's referred to as the required supplemental, and then the supplemental. So in the supplemental financial statements, that's where these aggregated remaining funds are presented. This past year, there was a new FASB, which moved a number of the agency funds to the special revenue fund. So there's a new definition of custodial funds. I believe Lisa's already answered that question to some of the members here. Was it the members here? It was the public. Okay, so what happened is, excuse me, I just didn't know who she answered the question to, and I knew she'd already described this. So in the prior years, you had agency funds that included a number of funds that by definition, the governmental organization, so the GFOA, has determined that they are now going to be considered special revenue funds. So we've moved them from the agency funds to the special revenue funds. What does that mean? It means primarily that you're more responsible for those funds, where the agency funds are funds that you're just holding money on behalf of somebody else. The special revenue funds are part of your total fund balance. And so there has been a movement of funds between fiscal 2020. So if you were to look at your 2020 financial statements and compare them side by side with your 2021, you will see that you have more special revenue funds in 2021 that were previously reported as agency funds. Required supplemental, that hasn't changed any. That is going to be your budget and actual for your general fund. It's your budget and actual for your school unrestricted. And it's the required reporting for both your pension funds as well as your other post-employment benefit fund. And then the last page of the report, the independent auditors report, we actually referred to the report on internal controls. And again, both reports have no findings. If you look at the report, if you go one page, who's in charge here? Go into the next section, please. Sorry, this is just, it's difficult when I don't have the clicker. So the report on internal controls is a report on internal controls and on compliance with laws and regulations. So that report is a required report, again, by the GFOA. It's part of the governmental auditing standards. It's included in this report as the final report included. It's also repeated, if you will, in your single audit report, where there we report on both the internal controls and compliance with laws and regulations, as well as any major federal programs that we might be reporting on as part of the single audit report. Again, starting on page 13 is your management discussion and analysis. This is where the town has the opportunity in layman's terms to report or at least do an overview of the financial statements. So the information that you see in the MD&A generally is very condensed financial information, and it's the same information, of course, that you see further on within the document. The MD&A is also under discussion in terms of changes with the GFOA. They haven't made any specific changes at this particular point, but I believe going forward, you will also see some formatting changes in that particular document. The government-wide financial statement. So I know we've talked about this in the past, but just to kind of bring you a recollection of the financial statements themselves, you have really 3 sets of financial statements within the same document. You have what's referred to as the government-wide financial statements, and those are the financial statements that are on the accrual basis of accounting. Then you have your governmental fund financial statements. So those are the financial statements basically that the town reports information to you on a regular basis. So when Lisa spoke this evening about the budget and actual, those are your governmental funds that she would report to you on a regular basis. Your government-wide is a requirement of the GFOA to be in compliance with your financial reporting requirements, but is generally not something that would be reported to you on a regular basis. With the government-wide financial statements, the net position of the town is a negative $54,780,097 as of June 30, 2021. And you'll ask me, why is it negative? And it's primarily because this is the set of financial statements where you've got to pick up your pension liability and your other post-employment benefit liability, which certainly outweighs or out in terms of expenditures. It's a higher amount. So your liability is higher than your assets are for purposes of your pension funds. Your net investment in capital assets is $27,776,769. This is a positive amount. It includes the difference between your assets that you have on your books. So your assets, if you're in business and you think about assets minus depreciation, will be your net assets. And then you're going to subtract from those net assets any debt you have incurred as it relates to those net assets. And so it's a positive $27 million balance for the town. The second category in net position is the restricted amount. This is restricted to external restrictions. So it would be your special revenue fund, your capital projects, and your recycling. And your restricted net position at June 30, 21 is $3.3 million. Your current assets and other assets at June 30 are $20,761,000. Of that balance, 20 million are governmental activities and 363,000 is from your business type activities. And if we want to, or if you want to, we can walk through the financial statements themselves, but you'll see that your business type activities are your smaller funds, and some of which actually have very little activity. Your current liabilities right now are $4.7 million. Again, $4.5 million are from your governmental funds. So that's going to be your accounts payable, your accrued expenses, where your business type activities have a $256,000 balance at year end. Now, here is where your long-term liabilities come in that we were just talking about. So 112 million. 0.5 at June 30 are your long-term liabilities, 112 are from your governmental funds, and 322,000 or 320,000 rather are from your business type activities. General fund revenue. So if you, again, we're still looking at the governmental wide financial statements. Your general revenues are $59 million in 2021 and $57 million or $57.8 million in 2020. The difference or the majority of that is property taxes. Your expenses are presented by function. They're almost the same for both years, 76.2 million in fiscal 21 and 76.5 million in fiscal 20. The primary difference to between these 2 years is the education expenses were down due to COVID. So there were a number of education expenses during fiscal year 21, as school really wasn't back full force, that had lower expenses in that particular year. Your business type, and you'll see that really in the next paragraph, where your business type revenue from charges for services were $778,000 in 21, but they were $1.1 million in 20. And again, we're talking about a decrease primarily from the school cafeteria fund and the operational grants. So we're really talking about school related as well. Changes in governmental activities were a decrease in this year of $180,000 compared to a decrease in the prior year of $3.3 million. For the business type activities, it was an increase this year actually of $420,000 or $421,000, and a decrease of $78,000 as compared to fiscal year 20. Now, those again are your government-wide financial statements. So your business type activity isn't going to change any. It's going to be the same when you're looking at your business, your governmental-wide financial statements, and when you're looking at your governmental funds, you're really looking at an accrual basis for your enterprise funds. But when you're looking at your governmental funds, your general fund, your capital project funds, and your special revenue funds, that's where you see the big difference if you were to put both sets of financial statements alongside each other, or both sets of pages alongside each other. And what the government has done over the years is it's had added pages to your document which reconciles the two. So if you were to look right beyond the balance sheet on the governmental funds, you'll see a reconciliation back to the government-wide, and you see the same with the P&L for the governmental funds versus the government-wide. So it's a very helpful document because you'll see very, listed out almost in bullets where the differences really are. And the primarily the differences are your assets, and then of course your long-term liabilities when you're going from your governmental funds to your government-wide funds. Government funds, again, just as a reminder, your major funds are going to be your general fund. It's going to be your school unrestricted fund. You have a town capital projects fund, the warrant 1213 special fund, which has been a topic of conversation here at town for quite some time, is still being shown as a major fund. And then you have combining the remaining funds. So it's a definitional computation in terms of how you determine what your major funds are, but the town also has the opportunity to select additional funds that they want to show or they prefer to show as a major fund. And that's a good example, that warrant 12-13, that's an old warrant that was overexpended years back, is being shown as major so that it's not combined in the aggregate and not shown as an individual fund in the basic financial statements. The general fund, as you know, is the chief operating fund of the town. It currently has an unassigned fund balance of $9.3 million with a total fund balance of $9.782,670. That represents 15.1%. That's a very good percentage of fund balance for your when you're looking at your total budget. The GFOA shoots for 15%. The majority of your communities are going to be down somewhere around 5 to 7%. So Portsmouth, in terms of your fund balance, is doing quite well, keeping with what is recommended by the GFOA to be included as part of your fund balance accounts. Your school unrestricted had an ending balance of $1.3 million. 931,000 was committed. That represents about 2.2% of the total budget of $41 million. It did have a decrease this year of $318,000 in their fund balance. The change in fund balance this year, again, due to school closures. I mean, we're going to be talking about this for a couple more years, I think, before it really levels out and we can actually use old historical data to compare against. Because really, we're going to take, at least as auditors, when I'm doing a review or I'm doing analytics, I'm really going to take out these pandemic years and not use them as part of the comparison, because a lot of the information, as you know, is not something that we can compare against. We can just hope it doesn't happen again, I guess. Capital project funds, the major fund began in fiscal 2019. It recognized $1.8 million of capital outlay and expenditures and had other revenue of $582,000. This fund at year end has a fund balance of $716,000. And so that's the amount that you've got basically left to spend as of June 30 in your capital project fund that's major. Warrant 12-13. Oh dear. Oh dear. So warrant 12-13, I know we've talked about this year after year. The council decided a year ago or so that they were going to take 50% of their fund surplus at the end of a given year, and they were going to fund the deficit that's left in 12-13 until that particular fund is I don't want to say paid off, but until that deficit is relieved. And so this past year, there was $349,000 transferred into that fund. Last year, you had a $600,000 surplus. This coming year, during fiscal year, the surplus was $321,000. So the transfer that will go into that fund next year will be $160,908. So the balance is decreasing. Your other governmental funds have a total fund balance of $3 million, of which $232,000 was an increase in fiscal 21. Any questions so far? It's a lot of material and the document is big and long and comprehensive, but I'm trying to hit all the high spots. So you're required supplementary. So what are we required to do? We're required to report on your budget and actuals for the town as well as the school department. And and actually it's not the town and the school department, but by definition, it's any fund that has a special revenue fund that has a budget and actual. So in this case, it would be those two funds, which is why you don't see any enterprise funds. And of course, your pension and your OPEB required supplementary information is included in those sections. So just as an overview, your total revenue had a favorable result last year of $576,000. Of this amount, current property taxes were $1 million over. Fees and licenses had positive variance of $245,000, school housing of $40,000, and your school aid of $192,000. Shortfalls were in the budgeted area of your prior year taxes were $215,000 less than you had anticipated. Your hotel and meals tax, which actually was quite good when you think about the pandemic year, was $55,000 less than you had anticipated. Your public service corporation, $217,000, and your motor vehicle excise was $437,000 less than you had originally anticipated in terms of excise tax. On the expenditure side, you also had a favorable turn back of $558,000. Fire budget came in $237,000 lower. Your legal budget came in $182,000 lower. Your budget for public works, snow and roads were $115,000 lower, and your police budget was $479,000 lower. Some of these were related to very specific areas that I'm sure you've already had discussion with your finance department on over the quarterly reports as they just reported today. Your proprietary funds are on page 34 and 38, and these are the funds that we just talked about. So these are the funds that are business type activities, so they report exactly the same in your government-wide. These are accrual basis. They are reported as by definition in the same format that the private sector would report any type of fund. So in your particular case, you have some funds that have significant activity, like your school cafeteria fund and your transfer station, right? Those are funds with regular activity, cash receipts, cash disbursements. And those two funds, the school cafeteria fund has $147,000 at year end. And your transfer station has a net position of a deficit of $3,642. So not a significant shortfall, but it is a shortfall. Your wind turbine, that has a net position amounted to 0. That's closing out. That had a transfer in this year of $387,000, I believe, for the debt. Your summer school is 0. Your septic system loan program, that is a net position of 162. Glen Farms has 58,000. Your Arthur Daniel home and your Glen Manor home both have 0 and had no changes. So there are 6 funds, but for the most part, you have 2 or 3 of them that really have activity on a regular basis. The others are inactive, more or less. Your fiduciary funds. So on pages 39 and 40, your fiduciary funds have both your pension and OPEB. So you'll see that your pension net position is 71 million, where your OPEB net position is $2.2 million. That's really your health insurance, right? So that's for your retirees that have post-employment benefits, which is primarily health insurance. And your custodial funds were the ones we were talking about earlier. This was really formerly agency funds, but the majority of those agency funds were in fact moved to special revenue funds by definition. That's your basic financial statements included in your document. Followed by those are your notes to your financial statements. They are, or they can be found on pages 28 to 86 in your document. They include, both the summary of significant accounting policies. That's note 1. There really hasn't been any significant changes. They include various balance sheets. So you'll see cash, you'll see custodial risk, you'll see investments, both your capital assets and your debt notes, as well as your pension and your other post-employment benefit details. The one requirement that was new a year ago still remains in the document this year is the town's response to the state of emergency as it related to the pandemic. And we're hoping that note goes by the wayside next year, but I guess only time will tell as to whether we have new variants and whether we continue to struggle with the pandemic. Following that, again, we talked about this just briefly, is your required supplemental. The management discussion and analysis, just as a point of information, is also considered required supplemental information, even though it's at the beginning of the document. So just by definition, it's also required supplemental. The supplemental information, we talked about that briefly as well. So that's where all your non-major funds are going to be presented. So you will have a combining page that combines your capital project funds, your school grants, your town grants, any permanent trust funds that you might have. And then following that, you have all the detail of each and every one of the funds. So the state of Rhode Island requires that disclosure in your document. So if you were to compare your document to, say, financial statements of a town in New Hampshire or a town in Massachusetts, they don't normally have all of those funds disclosed. Rhode Island has historically asked that they be disclosed, so they're in your document. Also, in your document is the information from the collector's office. So it's going to be the annual report from the collector's office in terms of the tax rate as well as the collections on the individual years, and what's referred to as the MTP2, which is the report that goes to the state of Rhode Island that allows the state to compare one community against another. So that's really just a data report, but that's also included in your report. And because you are submitting your financial statements to the GFOA, which not everyone does, you have a statistical section, and that section discloses a lot of additional financial information. Some of it's non-accounting, some of it's social and economic data, which is reported, and that's reported by the town and included in the financial statements. But that requirement is a requirement for those communities that are submitting their financial statements for certification. So without that information, the certification would not be available to the town. So that information is included. The next screen just happens to describe it all to you, but it's just a summary of what is included. A lot of it is multiple year information that is included in the document. And again, it's primarily for purposes of being certified. And it certainly gives the readers a lot of historical information with regard to the town, and that's all found on pages 190 to 205. So that's really all I have on your financial statements this evening. I don't know if anyone has any questions. I might be happy to answer them. I know that was quick and hopefully painless. And I know it's a lot of information, and I'm certainly always available to answer any questions. So if anyone goes to the document and they have a particular question that they would like some further information on, I'd be more than happy to answer those questions, either here tonight if I have them with me, or I can certainly get back to you.
Thank you.
You're
That
welcome.
was very comprehensive, and it was helpful to explain some of those differences between last year's report and this year's report. Are there any questions from counselors at this point?
One quick one, Mr. President.
Sure.
As Ms. Lasky pointed out, we have $125,000 roughly in our special revenue fund, snow reserve fund, but it doesn't show up in the actual, it's not broken out in the audit report specifically. Is it possible to have that broken out in the audit report so that we can see it?
Sure.
The reason I would like that is that if we get to a point where we have enough money in there, this council can make a decision to transfer some of that money to road repair or other upgrades. Right now, we have 125. If we've spent another 20 or 25 this year because we're over, so be it. But if we get to $200,000, which is basically a full year's snow removal, it would be nice for the council to have the authority or the ability to move that over and know how much is there as we do budgeting.
Sure. We can certainly speak with the town and determine where would be the best place. There are other reserves. Would you be interested in other reserves as well, or just the snow reserve?
Just the snow reserve, that one,
Okay.
it's there specifically to help avoid us having to pull monies from other departments or other
Okay.
areas of the DPW to supplement in a year like this year when we're over and overtime because of snowstorms.
Sure. Sure. No, we can certainly do that.
Are you okay with it being a footnote as opposed to creating a whole separate major fund? Because otherwise you're going to have another major fund here, because that's what you're kind of asking to do. And it would be a major fund with very limited activity. And
A footnote or in the back
Footnote
where
is
you have
okay.
different reserve funds or,
we
there's
could do,
balances.
we could do a fund, reserve fund.
I'm hoping that that one major fund, 1213, goes away real soon.
I'm trying.
So
Had
do we.
had certain people listened to me 6 years ago, it'd be gone already, but we won't go there.
Certainly, we could do that. And we'll talk about where the best place is to put it, because Lisa's correct. If we put it on the combining page, it's tight to begin with, and it doesn't have a lot of activity. So
I just want to be able to see it so
Sure.
that we can make decisions as the budget's going forward.
sure, we can certainly do that.
If it gets up big enough, $20,000 could pave a couple roads
Sure,
or repair a few catch basins or something.
we can do that. Any other questions?
Sorry, I just want to thank you, Ms. Shahady and Ms. Lasky, for helping us get the Certificate of Achievement for Excellence in Financial Reporting another year in a row. I
Thank
think
you.
that's really great.
And I'd
Thanks.
like to thank Ms. Lasky as well. She's new to the town and she was a great help because of the transition clearly to get the audit done and get it done timely. And that's always a lot of work.
Right, thank you so much.
Questions, comments? So
Okay. Well, thank you very much.
I think we've already received it and placed it on file, right? We probably did that when we first got it, right?
we might have some questions coming up. You may have to sit tight for a moment.
I think we did it when we got it. I just don't remember if we did.
Are you making that motion?
Not the
Well,
short person.
I think we got some comments, questions.
Nancy Grebe, 110 Thayer Drive. On January 13th, 2022, I received a printed copy of the Portsmouth, Rhode Island Annual Comprehensive Financial Report, the audit. I paid the town clerk's office $31.65 by check for my copy. This past weekend, I decided to take a look at the audit, a second look at the audit in preparation for tonight's meeting. Since my $31.65 copy had been appropriated by someone else in my household, I decided to go to the town website to look over the audit. I did not get further than Richard Rayner and Lisa Lasky's letter of transmittal. On page 4 of the letter, under title pension, it is stated, and I quote, "The plan's funded ratio was 65.95% as of June 30th, 2021. That was not as I remembered going through it last month. So I asked to look at my $31.65 copy. Yes, I was correct. In the paper copy, the sentence is written, the plan's funded ratio was 69.95% as of June 30th, 2021. I looked back at the website through the report and found no mention of a correction. Also, I noticed that both copies of this letter are dated December 21st, 2021. How can this be? First, which amount, 69.95% or 65.95% is correct? When was it changed and why was the change not noted or explained? Anyone working with large budgets and audits understands that changes to publicly released documents must be noticed or footnoted. This is accounting 101. This is not the first time that Mr. Rayner has changed a financial report without notation. Finding a mistake and correcting a mistake, good. Finding a mistake and correcting the mistake with no notation, bad, and begs the question, were you hoping that no one would notice? The town of Portsmouth is a $70 million a year public corporation. We, the residents, are stockholders. We need to trust the financial reports we receive from our employees. The larger question tonight I have is how many more changes have been made in this report without disclosure?
Mr. President, my name was mentioned. I'll just state for the record that never once have I ever defrauded this town. Have I ever deceived this town on purpose? Or did I ever make a change with the intent to hide information from the public? I'll turn it over to Ms. Lasky and she can explain what happened.
I reviewed this document as we were going through it, back and forth with our auditor. We reviewed it. I had my assistant review it. We went back and forth. I don't know how many times making, just trying to find the last minute problems. I missed one. This is on me. It was me who made the mistake, and I apologize to the community for not expressing the mistake in a formal statement to the town.
I said correcting a mistake is good, a notation. If I had only had that, the paper copy, I wouldn't have known that. I mean, All you had to do was post on the website under notices, we've made a correction. Please look at page whatever, and the
Noted.
correction's on it. That's my problem.
Noted.
Not that you made a mistake, that you corrected it without making a notation or telling anyone that had a paper copy that it was
Understood.
made.
It will not happen again. I learned my lesson. I made a mistake and I made the correction and I asked it to be posted onto the town website, and it was posted onto the town website. So
Thank you.
Mr. President, I'll take responsibility for it. I found the typo, asked for it to be corrected 2 or 3 days after the audit came out, and it was corrected. I find it ironic that if it wasn't corrected, that it would not have been noticed and the percentages would have been wrong. But it was corrected because it was a typo. Simple as that.
Okay. Thank you, Mr. Hamilton. Mr. Grebe?
Tom Grebe, 110 Thayer Drive. Since the council closed the defined benefit pension plan and switched to a 401k plan in 2012, the defined benefit pension plan's total liability has increased 50%, or by $35 million. Total liability has nothing to do with how much our pension assets earn in the market. It is simply the total cost to the town of the program. Clearly, a 50% increase in a closed pension plan is astounding. I was hoping this audit would shed light on what is driving that liability increase, but the report is woefully deficient in providing insights into what's happening in our pension. The current audit reports pension changes in only 3 overly broad categories. 1, changes in assumptions. 2, differences between expected and actual experience. And 3, differences from expected investment performance. Those 3 categories have been used to report almost $10 million of changes in a single year without providing any further details. Over the last year, I've spent time uncovering some of those details. So I would like to ask our auditor a question. Last year, your firm missed that there had been an unauthorized reduction in the pension asset return rate used for the calculations. As a matter of fact, that audited report that your firm gave a clean report to actually states the rate had not been changed when in fact it had. Without details in the report, no one, not even our auditor, found that unauthorized rate change. This year, that return rate was corrected back up to the proper council determined rate. That increase in the return rate should substantially reduce this year's pension liability. My question, which of the 3 categories was that reduction incorporated into? By how much did this correction reduce the total pension liability? And without that reduction from the correction, would the pension liability have increased again this year?
Now, I just want to, you're bringing up some great questions, Mr. Grebe. I'm not sure we can get into all of the detail tonight, but what may be helpful is for us to respond to your questions, give Ms. Shahadi some time to provide those responses as opposed to trying to go through everything tonight, because that was like a 3-part question, a lot of information. And what I feel might be beneficial is for us to get you those answers, or to get answers that would probably be better suited than just trying to go through things tonight.
Mr. Aguirre, I 100% agree with you. Matter of fact, I had the same idea last year. My only problem is that despite the fact that Ms. Shahadi said she would get back to me after 3 reminders, I never got the answer.
Okay.
I'm willing to try it again.
Okay, so if you could leave us a copy of those
I will
questions.
do that. I will do that. I like last year, I will send you a copy of my remarks in the
Okay.
morning.
So we'll get a copy of your questions and then we will,
That's fine.
we will get you responses.
All right.
We're all here on record. We will get you responses.
All right, that's fine. Let me continue then.
Okay.
My research also discovered that this reported fiscal year, 3 new and or existing employees were added to the closed pension plan by town staff without council authorization. Like last year's rate change, these details were not included in the report. Employee additions to the closed pension plan should substantially increase the liability. Again, I would like to ask our auditor which of the 3 categories that liability increase would be and how much did adding those employees into the pension cost the taxpayer? I'm going to make that a rhetorical question for tonight. It could be a coincidence, but I find it very troubling that the staff corrected a prior unauthorized rate change and reduced pension liability in the exact same year that they added unauthorized employees into the pension, which increased pension liability. Correcting one unauthorized action offset the other. Since there are no details in this audit, a reviewer gets no idea of what really occurred, that people were added into a closed pension plan. In addition, the 2 back-to-back unauthorized pension additions completely obfuscate a significant increase in liability. That hardly upholds the ideal of transparency touted in the report's transmittal letter. Portsmouth closed pension liability has been climbing dramatically without a proper explanation for years. The town had to more than double its annual pension contribution to $5.6 million since 2012 in order to keep up. I have now informed the council of 2 unauthorized and undisclosed actions which raise the pension liability. There are definitely more drivers to be found since those 2 actions do not come close to explaining the full $35 million liability increase. The council needs to have a complete review of this pension plan. The purpose of that review should be to identify all the hidden drivers behind the $35 million liability increase. It should be done by an independent outside expert reporting directly to the council rather than the staff for obvious reasons. Portsmouth urgently needs to understand and address those drivers before things get even worse. Such a review would fill in the details that are missing from the audit and be an unassailable baseline by which to manage the future pension performance. I'm asking the council to budget for that review of the town pension plan so that the residents can understand exactly why the closed pension plan's liability has grown so much so quickly. Only then will the council have the information needed to get this supposed closed pension plan under proper control. If there's any questions, I'll take them.
I think for starters, let's take a stab at getting responses and working through your questions or your comments. And then we'll go from there.
Okay, very good.
I am Larry Fitzmaurice at 50 Kristen Court. Obviously, we're concentrating on the pension plan. We have a suggestion for the council in terms of controls. This audit, of course, is supposed to review those controls in view of what we have discovered over time, the last few years. We believe that the council needs to become directly involved and to formally establish a set of controls. So this is what we recommend, and I'll read them because I think it's careful. I want to be careful here. As we all know, the defined benefit pension plan, which is the issue here, not the 401ks or any of the rest of that stuff. This is the one managed by the town of Portsmouth. Represents a substantial cost to the town and citizens of Portsmouth. Its current asset requirement is $108 million. The financial risks for the town are substantial. As I always say at times like this, when the town makes a financial mistake, as inevitably we will all do, the taxpayers are the ones who, for the most part, make up the cost. So that means that the taxpayers are ultimately holding in their hands the liability for this pension plan. As we all know, the things are huge. Other communities have worse problems than we are. We're not here to say that we have a bad pension plan, but we're here to say that it can be improved. So we recommend the following. We believe that the council should adopt a pension plan ordinance that would include the following. Establish the council as the sole authority over policy, structure, and operation of the Portsmouth pension plan. Establishes that the Portsmouth defined benefit plan is closed to all employees who are not members of that plan as of September 12th, 2012, as codified on February the 22nd, 2016. In other words, I was there when all this happened, and this was all intended by everybody to be a closed plan, but in fact, it hasn't been. And that needs to be controlled by the council. Number 3, establish pension plan investment committee and its membership and require quarterly meetings of that committee and reports on investment fund performance. Now, we're largely there. We've done this in 2012. So the problem is the investment committee doesn't meet very often. It's only met once last year, and that's a problem. And we got into a problem which that investment committee dealt with, I think, and we have made a change in a fund manager for the investment fund. However, we ended up surprised by that, and I'm not sure why, but there hadn't been meetings of that committee in the 2 years previous. And I could be wrong on that, but I think it's 2 years. So that thing needs to be codified, and reports need to be submitted to the council, and those reports should be posted online. Number 4, establish annual oversight review by the council of all pension plan reports, such as the performance, actuary report, and pension membership. I'll point out that I don't think any of you have read the Siegel report for 2 years running. And that's because nobody gave it to you. Now, maybe you did, and I don't know about it, but it was never listed in correspondence as received. And it was never posted until we asked for it to be done. So we were confident that that's been corrected, but it needs to be codified in the ordinance. And number 5, require that all pension plan reports be posted on the town's website and displayed in the council agenda correspondence. So these reports should always show up in correspondence so that people like us see them coming around. Any questions? Again, what we're after here is a formalization of the pension plan so that all members of administration know their responsibility to consult with the council and to seek council approval whenever they make a departure from the pension plan's overall policy document. That's the idea. So we've had some problems here. We've had 3 people added to this pension plan without this council's approval. I'll repeat that, without this council's approval. And 3 people could easily constitute $3 million by the time this is all said and done. This is serious money, lots of money involved, because we're talking about a long-term obligation of the town when we add somebody to the pension plan. Again, any questions? Okay, I'll give everybody the page that we use a lot, page 129. That's where the pension plan is summarized. Thank you, Mr. President.
Mr. Fitzmaurice, actually, one quick comment. You rattled off a few
I did.
suggestions. Clearly, we cannot take any action on that tonight.
Understand.
Are you suggesting you're going to provide us a copy of those?
I'd be happy to send it, and I may alter it a little bit when I get to working on it again. But I will send it shortly.
Okay.
And again, I don't think that this, this is anything the council needs to get. I'm sure the council will have additions if they get into this business. But the key thing here is the council's oversight, and it should be clearly defined without question. Thank you.
Thank you, Mr. Fitzmaurice.
Mr. President, just for the record, I'd just like to state that obviously there's a good number of suggestions here, which I'm sure we will act on appropriately. But there's been a number of comments tonight made that there were employees added to the pension plan who were unauthorized and without council knowledge. I'd just like to state for the record that that's not true. And I think it's important that we answer that in the future in the appropriate forum, but I'd just like to state for public knowledge, the staff has not violated any of the tenets of the pension rules that were established in 2012 and codified again in 2016. I'll leave it at that for now because there's only so much I can say.
No, I understand where you're coming from, Mr. Rayner, and it's tough right now. I understand your comments that have been made, statements that have been made. But I also understand Mr. Rayner's comments, and the council, will respond so that we have some clear answers, and we'll provide the information moving forward. But I do support Mr. Rayner's position that things have been done as he stated.
Well, I should have cited where I got the
No,
information from.
I understand.
No, I don't want to answer the question. And make the point, sorry. We submitted a Access to Public Records Act request to the town for all membership in the plan over a period of time. Those people currently in the plan making payments, and those people in the plan receiving payments. And those documents were provided to us on time, by the way. And that's the document we received, and that's the document we reviewed. And there are people who appear in the plan over the last couple of years that weren't there before. Now, that means they were added on. Now, maybe there's an explanation for that, but it didn't occur to us. Thank you.
Understood. We will leave it at that for this evening.
Council President, may I just add that there's a couple areas on the website that do have the SEQA reports. It's under the Finance Department. So they are there, they have been there. And I had actually shared that with some of the members of the community as well, exactly where you can find those SEQA reports. So they are there and they have been there.
I know where to find them now as well. Thank you. Thank you. I think it was Mr. Rayner who helped me find them. So no, I appreciate everyone's involvement here. Obviously, there's some good discussion going on, and we will get some answers to your comments to provide some background and some detail to address your comments and concerns. Might take us a couple of weeks, but we will get that information. No? Okay. All right. Well, then I think there are no more comments, questions.
Motion to receive and place on file.
All those in favor?
Ms. Jukusa?
Aye.
Ms. Abbott?
Aye.
Mr. Hamilton?
Aye.
Mr. Katzman?
Aye.
Mr. Kelly?
Aye.
Dr. Ryan?
Aye.
Mr. Ayer?
Aye. Motion passes 7-0. Okay. Let's move on to our next item, new business number 2. It's a request approval of the the Glen Manor House RFP bid to enter into contract negotiations with Russell Moran Catering and Events. Mr. Rayner.
Yes, Mr. President. The town received interest from 3 companies in response to a prior released request for information. That was released prior to the request for proposals that will request for proposal for the operation and management services for the Glen Manor House, which is on the agenda tonight. 3 companies responded, and information learned during that process helped us develop the request for proposal. All 3 companies expressed interest in the RFP and requested tours of the facility. Only 1 company responded, Russell Moran Catering and Events, or RMCE. The proposal has been reviewed by staff, the chair of the Glen Manor House Authority, and current caretakers of the facility. It is our unanimous recommendation to award the bid to RCME. This doesn't mean that they will run the Glen Manor House. What we're asking for tonight is approval to enter into a contract negotiation with RCME with the intent to bring a negotiated agreement before the council for final approval upon mutual agreement to terms governing the future operation and management of the Glen Manor House.
Okay, so moved.
Second.
Further
Motion.
Yep.
Oh, okay.
Yeah, to enter into negotiations, and then they'll come back. So I just wanted to make sure. I just wanted to see if there were any, there's no more comments or questions. So
Yeah, but the one thing I want to, I know you're going to negotiate this, but the one thing that needs to stay in there is, and you have it listed, is that discounted rate for Portsmouth residents.
Mhm.
That's one of the big things. It was paid for by the Portsmouth residents. It needs to be less expensive than somebody from New York. Substantially.
Yeah.
But
No,
thank you.
It was actually, I did have a chance to go through it, and it was very well put together. And I did like some of the options that were presented in there as well. So I think we'll see where the negotiations go, but I would support it. So we have a motion and a second. All those in favor?
Ms. Jukusa?
Aye.
Ms. Abbott?
Aye.
Hamilton?
Aye.
Mr. Katzman?
Aye.
Mr. Kelly?
Aye.
Dr. Ryan?
Aye.
Mr. Aguilar?
Aye. Motion passes 7-0. Okay, let's move on to next item is the review of the town capital improvement plan. Mr. Rayner?
Again, Mr. President, if you can bring that up, back up, it's page 2 of the backup. There you go. So this document lists the capital requests that Lisa and I have received from department heads. It's been, obviously, this has been pulled from the capital request plan, which lists out capital requests or capital needs for throughout the next 10 years, at least out till 2023. Or I'm sorry, 2030, I think it goes out to now. But the identified capital needs that are listed here total a little over $1.8 million. What we have done is we have prioritized this list in anticipation that the budget will not support funding for all the capital requests that we receive from the departments. So our plan will be to focus on projects and purchases with the highest or A priority, and then readdress lower priority requests as the proposed budget is finished over the next 4 weeks. This is informative for you, and if there are changes that you have mulled over the last week, or additions, deletions, edits, we're happy to receive them. And if there's anything for tonight, that'd be great. If not, we'll use this as our planning document that will inform the budget for the next, like I say, 3 weeks. We're still on track to hand in the budget to you on April 1st.
Mr. President, just one quick question. I don't know if you can answer this, or I'll wait for Ms. Lasky to sit back down. But what did we use? I'm trying to pull it up real quick in the budget documents, but what did we use to spend in cash last year for capital improvements? Is it close to that 1.3 mark?
No.
And I apologize. I'm just
Last
trying to look
year,
at it right now.
you recall last year that we divided between cash and
Right.
ARPA. So if, I don't have it in front of me, but if you were to pull up
I'm trying to.
last year's budget. And I can't remember what page it's on, but it's
It's,
90 something,
85.
85. I think when you scroll down, it comes out
It's
to
under the
90
purchase
something.
plan, right? So there's the ARPA plan. So it's
Yeah,
about
so you'll see-
1.426 is the
Yeah,
cash.
there you go. So between ARPA and cash, that's what we spend. Now, there's some things, obviously, we're only halfway through the year that are yet to be expended, but there's your list right there. So again, we're not asking for a vote. This was informative, so you understand what we are working towards and what we intend to put in the budget. It won't be more than 1.8, but likely less.
Thoughts from council?
Yeah, there'll be plenty more discussion during the budget hearings, but
Okay. So right now, we're gonna, from a budget perspective, we're gonna try to incorporate the 1.8.
we will incorporate, if you look there, the
Yep.
A priority.
I'm sorry, the A,
total to
the A
1.39.
1.4.
So if we
Yep.
can, we'll do our best to get there.
Yep. Okay.
If we can get higher, we'll go higher and incorporate the Bs and work our ways down to the Cs. But the A priorities, we feel that we've got to get into the next budget. And right now, it looks like we'll be able to do that. We'll see.
Okay. All right. Again, this is just for information.
Mr. President, I just want to say that I appreciate Mr. Rayner's and the staff's dedication to trying to analyze our capital needs and also to try to prioritize them in a thoughtful way. I know that prior to your efforts that there frankly was no organized analysis or prioritization. So thank you.
Okay. Excellent. Let's move on to new business number 4. It's request approval to send a letter to RI Housing requesting the discontinuance of the septic loan program. Mr. Rayner?
Again, if you recall, when we were getting out from underneath the notice of violation for our failing septic systems and cesspools, there was a situation where we knew that there would be residents who would be unable to afford to replace these systems. At the time, they're running about 20,000. They're up to about 36,000 and above now. So Portsmouth set up, we bonded money, and we set up a Portsmouth septic loan program. Not long after that, through Rhode Island Housing, also through Rhode Island Housing, we set up the CISLIP program, the Community Septic Loan Program. The Community Septic Loan Program, also, we borrow money from Rhode Island Structure Bank, goes into Rhode Island Housing, they manage it, and then it gets lent out at low interest to people who need it. The interest on the CISLIP loan program is lower than the interest on the Portsmouth loan program, but yet the metrics to qualify for both programs are the same. So nobody uses the Portsmouth septic loan program. They use the CISLIP program. And there are other programs available through other organizations which would help people who don't qualify for the CISLIP program. So this money is sitting there. We obviously have a bond that needs to be paid off. There's enough money in the program to pay off the bond. So what we're asking for approval from you tonight is to discontinue the Portsmouth septic loan program and use the funds remaining in that account to extinguish the bond debt associated with that program.
So moved.
And just a quick discussion, and this is a long-term financial thought process, but interest rates are going to start going up. Inflation has gone up a lot. And we've got this money at a relatively inexpensive bond. Is there another way that we could hold off doing this, pay off the bond, and still have this program available in the future for our residents if interest rates do go up substantially? That's a big question
Um,
that you might not be able to
Yeah,
answer
it's
tonight.
certainly possible. We have no indication that the interest rates on the CISLIP loan program are going to go up. I mean, obviously, your logic is clear. I mean, interest rates, or I'm sorry, inflation rate is over 7% right now. But like I said, our Todd Drake, our wastewater management officer, is working with a number of organizations in the area that are available to people who would not be able to avail themselves of a loan. And then the second thing parallel to that is we have a placeholder in the ARPA spending money for a grant program so that people, let's say there are two pots of people, other than the people that can afford it outright. There are people who would take the loan and just can't afford it because even the low interest loan payment, they qualify for it. There aren't very many, but they would not be able to even make the payment on the loan without being in danger of losing their house. So we set up that grant program. Then there's another group of people that would, maybe due to their debt to income ratio, if they could lower that somehow, they can only qualify for so much. So maybe with that ratio, they can qualify for $20,000, but not the $36,000. So trying to set up a program, use some of that grant money to cover that delta that would help them. So there's three avenues. There's the loan program with the current interest rates, whatever they're going to be. The grant program that we're setting up that would help those two pots of people. And then the third program, which is being pursued by Todd Drake, which is bringing other organizations into this program that would be able to help these people because they can't get a CISLIP loan and they would qualify for grants outside of our program. So I think, and I can feel the laser beam on the side of my head from my finance director. I think that we've been carrying this money for a long time. I think we should probably just go ahead and extinguish that. And if we have to, we can always readdress this at a later date, either borrow money. We can always increase the amount of money that we're borrowing from Rhode Island Infrastructure Bank that is being used for CISLIP. And then I don't know what is going to come out of it, but there's also the Build Back Better. There's the infrastructure money available to the state. Rhode Island Infrastructure Bank right now is going out to all the cities and towns asking for, what are your big ideas to address water, sewer, broadband? So this might be one of the things that we ask them about.
Thank you.
Okay. So we have a motion and a second to basically discontinue the septic loan program. All those in favor?
And pay off the bond.
And pay
That's
off the
the
bond.
big part.
And pay off the bond, yes. All those in favor?
Ms. Jukusa?
Aye.
Ms. Abbott?
Aye.
Mr. Hamilton?
Aye.
Mr. Katzman?
Aye.
Mr. Kelly?
Aye.
Dr. Ryan?
Aye.
Mr. Aguiar?
Aye. Motion passes 7-0. Okay. On to new business number 5. It's a request approval for the use of the ARPA funds not to exceed $20,000 to purchase replacement IT servers for the public safety computer network. Mr. Rayner.
That's me again. Last week, you approved a reprioritized list of the ARPA money, but what we did not, we talked about the public safety IT servers, but you did not vote on those specifically. So tonight, we're asking for your approval to expend no more than $20,000 of the ARPA money on the public safety IT servers. The issue that we're facing here, and the reason why we're asking tonight, is the prices for IT equipment are going through the roof. They are available, but the price is only good for about another 10 days.
Motion to approve. Seconded.
Comment?
No, I was just going to say motion to approve, but
Oh.
Mr. Katzman beat me to it without his
All right.
microphone on.
So we have a motion and a second. All those in favor?
Ms. Jukusa?
Aye.
Ms. Abbott?
Aye.
Mr. Hamilton?
Aye.
Mr. Katzman?
With my microphone on this time. Aye.
Mr. Kelly,
Aye.
Dr. Ryan,
Aye.
Mr. Aguirre.
Aye, motion passes 7-0. Next, we have correspondence.
Motion to receive and place on file.
Seconded.
All those in favor?
Ms. Jukusa?
Aye.
Ms. Abbott?
Aye.
Hamilton?
Aye.
Mr. Katzman?
Aye.
Mr. Kelly?
Aye.
Dr. Ryan?
Aye.
Mr. Aguirre.
Aye, motion passes 7-0. On to future meetings. Yes, we have a meeting every Monday night.
That's good.
Through April 4th. And this is our next meeting is March 7th, which is a town council comprehensive public plan workshop, public hearing. Our regular council meeting will be March 14th. And the following Monday is the back to the comprehensive plan public hearing. Next council meeting is March 28th, and then April 4th is the next comprehensive public hearing. So we'll be here every Monday through the 11th. All right.
That's to say, we get it in the budget workshops and like
Yeah.
Tuesday, Wednesdays, and Thursdays.
Mr. President, I move we adjourn. Seconded.
All those in favor?
Ms. Jukusa?
Aye.
Ms. Abbott?
Aye.
Mr. Hamilton?
Aye.
Mr. Katzman?
Aye.
Mr. Kelly?
Aye.
Dr. Ryan?
Aye.
Mr. Aguirre.
Motion passes 7-0. Thank you all, and have a good evening, and we will see you next Monday.
Thank you very much.
Thank you.